Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hello, everybody, and welcome back to another live stream. Today is Tuesday, and we have some hot and ready news for you. Today, we've got CPI for Canada and retail sales, as well as core retail sales here in the United States. Welcome back to the stream. You guys can see with the awesome team I've got behind the scenes, we are constantly leveling up the stream. You saw those loading screens, which, you know, they were very creatively well done. So shout out to Chandler for doing that. And welcome back, everybody, to the stream. We are back in the studio doing our thing. And, you know, let me double check. I need to turn on my lights. Stay right there. We can go full screen for a second. Let me set up the room here. I just forgot to do this guy here. Get that going. And then we got this going. Go here. There it is. There we go. You can't proceed to stream without completing the room. We put in so much work on putting this room together. Might as well have it all set up. Hope everybody's doing well. Welcome back to the stream from your friendly neighborhood cat dad. We are back in the building. Let's get into some charts. Let's get into some news here. So again, we have CPI numbers coming out for Canada. This is, of course, a measurement of inflation. And at the same time, we have core and headline retail sales numbers coming out in about 7 minutes and 40 seconds. We're going to be going into some charts. We're going to see what's going on. I've got a trade on myself. We'll see if it is impacted by this morning's volatility. And yeah, let's see. So starting out, let's take a quick look at the stock market, the index, the S&P 500 here, which sort of still trading choppy, still indecisive in my view. I don't think we really get serious interest until we can break one way or the other on this range that we've got, the green zone representing our lower limits and the red zone highlighting sort of our upper extremes. Again, very choppy on these charts. And for me, the indices of the three, the only one that is potentially interesting is this NASDAQ. So the NASDAQ here trading near the highs. I'd be very curious to see if we can get a breakout of resistance, if this could ultimately turn into a bigger move to the upside, right? So if we get a breakout here, 13,420, if we're able to get above that, if we can break through that, any sort of attempts to retest in this area, to me, super bullish. I've been bullish on the indices overall, but just been passive on the S&P as it's been so range bound. I'm waiting for price action to start to break and retest that sort of thing. But right now, what we're seeing is that the NASDAQ continues to stay range bound. Do we have, oh, sorry. I heard something on my headset. That was weird. Someone walked in the kitchen. I heard it like it was a knock on my door. It was weird. We are, of course, context. We're in a studio office. This is where we do all of our live streaming campaigns and videos and stuff. We've got a studio office in Atlanta, Georgia. And if you guys are new to the stream, I want to invite you here as we get closer to the news event. We stream these events. We give coverage, commentary, and our own trade ideas, as well as charts we're in, trades we're in throughout the week. If you're new to my channel or to the A1 Trading channel, we're streaming on 2 locations right now. Make sure to subscribe and hit that thumbs up button if you're enjoying the content. So, yeah, Ghost of Trading Pass is knocking on my door. So that's what's going on in the office today. So, and that Ghost of Trading Pass can be pretty creepy. Trust me, in terms of demons in your closet. That's not one you want to mess around with. We all have them, right? Trading can be very tough. Regardless, I'm watching the NASDAQ. Let's take a look at the dollar here. Again, retail sales numbers set to come out in about 5 minutes here, as well as CPI for the Canadian dollar. We'll have to take a look at perhaps dollar CAD here, see what's going on there. So the dollar pulling back off of its extremes here. We saw 102.75 get printed here before pulling back. So we've seen price here on the dollar index, which is, of course, the dollar relative to a basket of other currencies, pull back a little bit here this morning. The question will be whether or not retail sales will be able to support price off of this low. And what that would mean, by the way, would probably be, let's think about it from a fundamentalist perspective. From a fundamental analysis perspective, if retail sales come out hotter than expected, meaning showing strength in the economy, it is more likely that the Federal Reserve will have more wiggle room to potentially raise rates or to hold them flat for longer. Both of those would be considered more hawkish and ultimately be more bullish for the dollar. As we know, higher interest rates attract foreign investment in the form of bonds and other interest rate securities. And so that attracts strength to the dollar. So we'll have to see how the retail sales numbers come out. They're not usually a stupendous market mover, but they can still be something of insight to traders out there who are, of course, paying attention to the fundamentals. Now, I'll take a quick look here now at my position here. I am currently long gold, and I'm going to be honest with you guys. Today may be a decision point for my trading. My trading on gold. So I am long gold. Here is my position. I've just logged into my brokerage. I'm long gold and floating a slightly negative position on my trade. If price breaks through the lows here today, for those of you who are also watching gold, if we break decisively through the lows, perhaps on very strong retail sales numbers or something like that, if we show economic strength, it could cause a bit of a sell-off on the gold market. If this occurs, I will stop out of my gold position for a small loss. We'll keep an eye on gold, of course, but again, my thought process is essentially my stop loss is down here. I am entered into the trade in this green zone, and if we can hold above this green zone, great. I'll look to see if we can, in fact, make a rally perhaps to the previous high. That's ultimately what I'm looking for on gold. And if I'm wrong, again, my plan is to stop out and take a moderately small risk on the account, a moderately small loss on the account, right? Speaking of silver, we can also take a quick look at silver. Someone requested in the chat. Silver underperforming gold right now. We broke through support pretty substantially and did barely bounce before continuing the sell-off here. Silver, it looks like it's in a rough place. And this is perhaps in some ways more similar to the oil market, right? Which is down, commodities seeing some downward pressure out of some fears of potential recession, right? Recession is not great for commodities, right? If you think about it naturally, and again, we've got, let me not get too off my sidelined here. Commodities are typically very red hot during periods of very high inflation, but also during periods of time where the economy is growing pretty substantially because, again, a growing economy demands more commodities, right?
All right, folks, we're here. I'm gonna save the stream. I don't have a chart in front of me, but we got news coming out. So in any moment now, if anybody wants to send the numbers through, oh, everything's gone here. I'll just make myself full screen. There we go. Hello. Maybe not that full screen. All right, cool. My hair's a mess. All right. No sound. No sound. Y'all can't hear me? Can y'all not hear me? Hold on. Hold on. Y'all can hear me. Okay. News is coming out any second now. Nick's coming back. And here he is. There he is.
I'm back. Sorry about that, guys.
Right at the news drop. The news drops right now. We got breaking news. I'm going to hit the thing.
All right, guys. And retail sales, sorry for that. Just in time, just in the nick of time. Oh, Oh, the memes today. Thanks, Chandler, for jumping in. Dollar dropping here initially, guys. Let's take a look at what the numbers were in terms of retail sales. I am operating off my hotspot, so I hope that the stream quality is okay. I'm not sure what happened with the internet. We just had numbers dropping. CPI, of course, for Canada coming out at 0.7%. This is hotter than expected inflation there, month over month. Year over year, slightly higher than expected there. 4.2 median CPI trimmed 4.2. And the big one, guys, retail sales number for the US, slower than expected here. Core retail sales down 0.4%, showing some actual down movement here in terms of retail activity, retail positioning, not retail positioning, of course, but retail sales volume. Retail sales month over month also down, and the dollar seeing a little bit of a rally here. Let's take a look at what the S&P. I would imagine that this, of course, would put some pressure for those of you who are watching indexes. It would make sense, right? You would see a little bit of down off of perhaps consumer demand cooling for goods and services. What we can see here is that gold also taking a little bit of a spike in both directions. Gold trading just above 2,000 right now, 2,004. And let's make sure we get our 4-hour chart here. Here is gold, again, continues to sink lower this morning. We just mentioned silver. Silver probably also taking a bit of a dive there as well. And there it goes. If we're taking a look at things like the euro this morning, the euro taking a bit of a dive. And it's interesting to see the dollar up here this morning. What we see here is, again, core retail sales slower than expected. Month over month, retail sales down here. And an interesting reaction, I would say, to the dollar, because, of course, what we would expect here is a weakening dollar off of slowing economy numbers like core retail sales and retail sales being lower than expected. So an interesting one here. The dollar rally just popping a little bit here off of the 1-hour chart. You can see a solid green candle printing off of this level of support, showing some resiliency here for the dollar. Can you guys hear me? Someone said I can. Okay, you guys can hear me. Okay, cool. Ignore my message. Yeah, so the dollar finding some support here off of this structural low, rallying off of that, and very interestingly seems to be holding support at this time. 102.47 coming into play. And again, this is hurting my gold position. My gold position now floating in the red now. So let's go take a look at that. You guys know I like to show trades win or loss. So I've got a trade that is now in the negative. We're down about $307 on this gold position. So we'll see if this move wants to sort of hold. And if it does, of course, I will be stopping out. You guys know I mentioned this earlier, but if price persists lower on the gold market, I will be stopping out on gold, and that's where I'll be keeping an eye on that. However, if we're able to hold this zone, I'm not too worried in the sense that, I don't think the trade is necessarily dead just because we had some volatility here. In fact, in my opinion, these numbers don't hurt my gold bull case at all, because again, slowing economic numbers could mean some fear in the economy. It could also mean that the Federal Reserve, seeing a slower economy, may be less inclined to raise rates. So in some ways, I would actually say that this report is perfectly fine and perfectly bullish for gold. We'll see if I get stopped out. Again, I am not shy to take a stop loss if I need to and potentially retry again on gold at a later point. So that's my current positioning here. Dollar cross has seen some volatility here. We saw the pound USD drop initially by a pretty substantial margin there, and then came back a little bit. And then we've also got, we mentioned the euro. Let's take a quick look at the Australian dollar here. The Australian dollar seeing a bit of downward pressure here this morning, and continuing to see some a little bit of a beat up here going into this retail sales number. So very interesting. Bias in the S&P 500. Well, core retail sales and retail sales numbers were cooler than expected here today. Didn't do too much to the indices, it seems. Just a slight downward pressure. Again, the market is very focused on what the Fed is likely to do next. That is headline stuff. So that's why we're seeing a bit of back and forth, I would imagine. Yes, you're seeing some slowing consumer tendencies. However, this also could help with the rate hike situation, right? No more rate hikes, less likely rate hikes, that sort of thing. If that's what the market is forecasting, well, those are sort of conflicting data points, and makes a lot of sense as to why retail sales here is not driving the market one way or the other for the indices, right? That's how we're reading into that. So yeah, guys, I also do want to say, let's take a quick look at where retail is positioned. Now, of course, this is retail positioning. We track what retail traders are buying and selling. And let's see what's going on. So dollar Swiss, Aussie dollar, euro dollar, what we're looking at here, these are assets that retail traders are very long on right now. Actually, same with New Zealand dollar, USD CAD, and pound USD. I'm sorry, forget those last two. Only the real three, I guess, are the initial three that we highlighted: dollar Swiss, Aussie dollar, and euro dollar. So how are we reading this, guys? What we're reading is retail positioning. They're very long on these assets. So the way I view that personally is, if they're very long, I'm more interested in being on the short side of that trade, because I tend to want to fade what retail is doing, because retail tends to be on the wrong side of the trade. Now, this is not a standalone reason for why I will enter a trade. Please don't get me wrong. This is just contributing data. So when looking for trade setups today, on the flip side, we have sort of the inverse. The only interesting ones here is you've got pound USD. Retail is pretty short. Dollar yen, retail is very short. So we're going to take a look at that dollar yen here today. I'd be curious to see how that's playing out with all of this. And then before we do that, though, let's make sure we go look at our commodities and indices. So we're going to look at commodities and indices really quick, show you guys the positioning here in case you guys trade gold, in case you trade any, if you trade the NASDAQ, if you trade the S&P, etc. Here's what we've got. So oil and gold. Retail's pretty mixed on gold right now, so there's not a super interesting reading there. And then also oil at 72% long. Retail traders are very long oil. Flip it around, we take a look at what they're very short on. They're very short on a lot of indices. They're very short on the S&P. They're very short on the Nikkei. They're short on the DAX, and they're short on the NASDAQ, so in the UK 100. So retail traders are betting against the indices right now. They're 50-50 on gold right now. And the oil market, they are very much on the long side of the oil market. This retail sentiment data is available. If you guys want to try this out for free today, here's how you can do it. We're going to drop a link in the chat. If you guys send a message to this link, it's going to connect you to one of our support reps here at A1 Trading, who can get you access to our tools and data. We are a software company. We build tools for traders. So if you're interested in getting access to what you're seeing on the screen right now, this is available to you for free. Click this link and send us a direct message. Ask us to try out the Edge Finder, is what the product is called, and you can try it out for free. So if you guys have been thinking about checking it out for yourself, I also want to take a look. Let's take a look now. We looked at what retail is doing. Let's take a quick glance at what institutional money is doing. And yes, you can also try this out for free here today as well. So we're looking at the COT report data. This is what we call the smart money tracker, and give it a second to load. I'm not sure why it's being so slow this morning. May need to refresh the tab. Anyways, let's keep an update on what's going on with gold. Gold traded down to 2001, found some strength there. So that's good. Again, you guys know, and if you just joined, I am long gold, so I'm watching for this. What's going on with the, oh, it might just because I'm on my hotspot. I'm still on my hotspot because the stream decided to blow up. And let's see. We're still connected to internet. Yes, okay. I have to make sure, because again, I'm running off of my phone's hotspot. We are running on empty here on the stream today, barely surviving because the internet decided to crash. So Edge Finder might not load. Let's just be happy that we're even streaming here. Anyways, a recap on the numbers for those of you guys who are just tuning into today's live stream. We had retail sales numbers come out cooler than expected. Retail sales numbers down from expectations, still up overall, right? It was a positive growth, but it was 0.4% compared to 0.5% expected and 0.8% respectively for core and retail. And then, CPI numbers also, of course, interesting for the Canadian dollar. Consumer price index ticked up to 5.7% year over year. Trimmed CPI year over year, 4.2%. So interesting to see that going on there today. And I don't know what is going on with the Edge Finder. I don't know if it's the Edge Finder or if it's just because I'm on my hotspot. So I'm just going to, well, now everything is loading slow. Hold on. Yes. Another day, another stream. The only issue I would say with streaming is that when you run into problems, when you're recording a video, you can just pause, fix the problems, and then come back. Streams are a little bit tough. Gold is flying. Gold is seeing a little bit of a pop. If you're looking at like the 1 minute chart, it's flying, but right now it's just barely moving back and forth on the higher time frames. 2009 being printed here. We're just back to pre news numbers here. Thanks, Colby. I appreciate you, man. Appreciate you guys. Those of you who put up with our chaos and understand, how hard we're working to put on these shows. We really do appreciate it. It really means a lot to us on the back end, because there's Chandler, James, myself, Frank, we're all here putting on these shows. We get up early each morning to set these things up. So it does mean a lot when you guys show that patience for us when we deal with stream issues. The S&P 500 trading down a little bit here this morning, but not too much. This is the truth right here. The internet only breaks when we decide we want to do a live stream. So that's always awesome. GJ. So let's just try the Edge Finder. There it is. There it is. Okay. This is the point I wanted to make, guys. I wanted to give you guys an updated look at the COT data. It finally loaded. And again, apologies for that. Thank you for your patience. So we're looking at the COT report data, and I want to show you guys this because what I notice is that part of the reason I'm being very hesitant with the S&P, you guys know I love trading the S&P, but institutional money is very short, and price action, in my opinion, looks pretty mixed. So right now, I wanted to show you this because the S&P, right, one of my favorite things to trade, is not great, right, in terms of institutional positioning. It's very short biased. The yen also very short biased, which might be something to pay attention to. And by the way, guys, for my friends out there who sometimes trade Bitcoin, we just got this added. So this is a secret update that we're working on right now. We are adding some cryptocurrency stuff, which is really exciting to the Edge Finder. So stay tuned on that. But again, part of the reason I continue to stay long biased on gold is institutional money is also very long biased on gold. Their positioning is very heavily leaning in favor of buy side. So I'm keeping an eye on that when I pay attention to this gold chart that I keep talking about. That's why I think we have potential for this zone to hold. If it doesn't hold, again, my goal is to stop out if needed. However, let's look at other trade setups. Let's see if there's anything else. My gold position has been relatively boring the last couple of days. So let's see if there's anything else. Dollar yen as a strong buy on the Edge Finder is very interesting to me. I want to go look at the chart and see what's going on with our dollar yen. So dollar yen on a pullback, I've mentioned this a couple of times. This might be a currency pair that I'm interested in maybe taking a long position on. I'm not super dollar bullish, but I am very yen bearish, right? I'm bearish on the yen right now. Gold flying. Yeah, it's again, gold is flying on like the 1 minute time frame. We're seeing some jumps. On the 4 hour time frame, we're just sort of trading flat. And so we'll see. What would really be interesting for gold for me would be breakouts here, right? That would be like, oh, hey, we're really seeing movement. So I'll come back to gold in a moment to see if there's something there. Dollar yen, 4 hour chart here, pullbacks. That's the name of the game for me here. Dollar yen. And again, this is primarily off of the Edge Finder. We have Swiss yen, dollar yen, pound yen, euro yen, all of these as possible buy setups on the Edge Finder. Now, of course, what this is showing us is that this is showing us the Edge Finder is taking all of these things into consideration, and it deems it a certain bias, bullish or bearish, buy, sell, that sort of thing. Of course, this is not financial advice or recommendations to buy or sell. It's what the Edge Finder interprets based on the data that it holds. And then, of course, we take this information and we can make trading decisions on our own with the insights that the Edge Finder is sharing. So that's the idea. So again, the dollar yen is on my watch list as a possible buy. I also want to look at like CAD yen. Did we see CAD yen? Yeah, CAD yen popped up here this morning. It is tagging a level of resistance. We'll see if that can break out to the upside. For CAD yen traders, again, the Canadian dollar here trading higher this morning off of higher than expected CPI numbers. Inflation showing some heat there in the Canadian economy. If we get breakouts, that could be an interesting trade, I would say. But we will continue to monitor yen pairs across the board here. Euro yen pretty lackluster, I would say. I mentioned I want to see a breakout here, but I also would like to see some sort of a pullback before getting any real serious interest. Perhaps a pullback into this may be interesting. I will say what is cool about the euro is that institutional money is very long the euro. And how can I track that? Well, again, I can go back here. I can go to Smart Money Tracker and look at the euro. The euro is one of the most long-oriented, long-positioned amongst non-commercial traders here from the CFTC's Commitment of Traders report. And again, if you guys want to try this out, we are doing free trials for a limited time. If you guys want to get access to the Edge Finder, if you want to try it out for yourself, if you want to ask your questions, please send us a direct message here. Just ask for a free trial today. There's someone on the other end. We have several support reps who are in the office right now, setting people up with trials. If you want your name on the list, get in there as quick as you can. The sooner you do it, the sooner you'll get a free trial set up for you. Where does the Edge Finder get its data from? It gets it from a huge selection of different places. So we have a whole, the Edge Finder, a little bit of backend. We do a huge amount of data sourcing. We pull a lot of different places, APIs, and we get the data from all sorts of different places. Then we visualize it all in here for traders to be able to see. And then on top of that, we have a scoring algorithm that we do. And again, you can read about all of the scoring that we do within the Edge Finder if you have access to it, or if you just chat with one of our support reps. The scoring algorithm is all built in here. So we get these scores based on a calculation that we do from all of these individual components. So it's a product our team has been working on for the last year or so. And if you guys would like to try it out, again, we are doing free trials for a limited time. Click this link and there you go. That's how you get access to it for free to check it out for yourself. Should you rely entirely on the Edge Finder for fundamental analysis? I use it for a ginormous chunk of it, right? It gives me the high points. And then if I just want day-to-day news, I can read articles and that sort of thing. But I use the Edge Finder as a primary tool in my trading to help me find the setups that I take. Look at that. The yen continues to be strong here this morning. Let's go take a look at that dollar. The dollar giving back a little bit. And again, to be expected, I'd be very interested to see if this dollar breaks back in to this range here, right? The dollar, in my opinion, from a fundamental perspective, is not my favorite of charts right now. And so we'll have to watch that dollar and see if it gives back some of its gains here. Real quick, guys, we're going to run a quick commercial break here, and we will be right back. So check this out, and we'll be right back to the dollar idea.
Attention, A1 Trading Show fans. Are you looking to get access to the Edge Finder for free? Our partnered broker 8cap is offering fans of the show 100% free access to our trading software. To get your access, all you have to do is click the link down in the description, sign up with 8cap, deposit $1,000 or more into your personal trading account, and then just let us know and we'll get you hooked up with the Edge Finder. 8cap is a regulated broker, offers many assets to trade, flexible leverage options, and has amazing customer support. Click the link down below to get started, deposit $1,000 or more into your personal trading account, send us a message when you're finished, and we'll get you the Edge Finder for free. Now, back to the A1 Trading Show.
Cool. And so just to give you guys a bit of an update on that 8cap partnership, we did get some new exciting stuff. If you guys have been thinking about, here's the thing. If you guys are looking for access to the Edge Finder for free and you're considering a new broker, so we haven't made this commercial break. It will be added at some point here. We're going to drop a link in the chat again to send us a direct message. If you guys want access to the Edge Finder for free and you are looking to switch brokers, send us a message and ask us about the 8cap partnership. So we are offering, again, the Edge Finder 100% for free. Well, we're not offering it. Actually, 8cap is paying for your access to the Edge Finder if you make a switch to their brokerage. It's kind of like if you switch phone services, you get a free phone with a lot of services out there. We're doing the same kind of partnership with 8cap. They've been awesome about this. So if you guys are thinking about switching brokers or you would like to check out 8cap, they're an amazing brokerage. They're one of the best ones out there. I can't trade with them because I'm in the United States and they don't accept US clients because, again, they are a regulated entity and there are some jurisdiction limitations there. But if you guys are outside of the US and you want access to the Edge Finder for free, they're paying for your Edge Finder so you don't have to pay a dime. All you have to do is switch brokers to them. If you want more information about that, click this link and send us a direct message so that you can get your Edge Finder for free, paid for by 8cap. It's a really cool partnership that we're doing, but you need to ask our support reps. They'll help you out with this so that if you have any questions, they'll work through that for you. Is 8cap available in Australia? I believe it is. 8cap manipulates the market. 8cap is regulated with ASIC, which is a serious regulatory body. So, yeah, I'd be careful throwing around accusations when you're talking about a, it is a regulated entity. So, regulated entities don't mess around with chasing your like $50 stop loss. Let's be completely fair, right? They wouldn't even care about my stop loss, right? If you're trading on a big brokerage, they're talking about millions and millions in volume every single day. So, yeah. How should I deposit with them before getting the Edge Finder from them? So, Thabo, I'm sorry if I said your name incorrectly. Anybody who is interested, please just direct message us. That way you can work with a support rep who can work you through that process and help you get access to the Edge Finder for free. So there you go. Yes. So let's get back to this dollar concept here. In terms of the dollar, 102.2 has held pretty strong here. And my dollar position is still, my gold position is still under threat, I will say, by potentially dollar spikes. However, if we can get that dollar to crack, guys, I think that this gold position has room to move higher. Now, I also mentioned I'm watching dollar yen, and I'm also watching euro dollar. Both of these are potential interests for me on the, on the dollar long side a little bit. It's kind of an interesting one here watching the dollar yen. It's mostly just because institutional money is incredibly short biased on the yen right now. That's been a contributing factor. And also because retail traders, when looking at dollar yen, are very short on this pair. So that's an interesting one for me as well. Let's see what else is on the list here. I mentioned euro dollar. Let's take a quick look at euro USD. The euro dollar continues to push lower. Did not catch this trade. I was watching for it, and I think I missed this one. So here is my my analysis just loaded. You can see. So had a big break to the downside there. Did not pull back enough for me to get my entry. I was looking at that 61.8% retracement. Did not get it off the 4-hour. And if it keeps going without me, it is what it is. But if it does decide to pull back, I'm interested in that trade. I mentioned that yesterday. We discussed that one a little bit on the live stream. I discussed that with Ivan. And speaking of Ivan, he is in the building. So let's say hello to Mr. Ivan himself. Hey, Ivan, what's going on? Hey, I think you're muted.
Really?
There you
Nothing
are.
much.
You're back.
Nothing much,
on?
just looking at the markets.
Of course, every day. You know how it is. We were here yesterday. Now you're back with us. So you guys know him and love him. It is the co-host of the show, Mr. Ivan FX. Ivan, yesterday I talked about my euro idea. It moved on without me. Yesterday we discussed some of the indices. We talked about the NASDAQ. We talked dollar. And what are you looking at today? What's the latest from yourself?
I would actually highlight, share screen is probably a better thing to do. Highlight euro yen, as yen pairs starts to come back into season. You mentioned CAD, you mentioned USD yen earlier. We saw that CPI out of Canada came out better than expected year over year, so it's currently flying higher, but I guess it can travel a bit more. So pull back to support will probably be great tomorrow or today, depending on when that happens.
Yeah, I was going to say that Canadian dollar CPI coming out a lot hotter than expected. What does that do for the? I don't really track the Bank of Canada too closely, to be honest with you. Does it do anything to their situation off the top of your head, or do you not really pay too close attention either?
No, also most people have priced in a pause. Would have said they're going to pause, data dependent, or they have paused data dependent, and this really puts sticks in their wheels, if that makes sense in English, because it was previously 4.3, now it's 4.1. It was supposed to be 3.9, so we are seeing a slower deceleration of CPI than expected, so it can lead to more hawkish comments from Bank of Canada, right?
Fair. Yeah, no, and I think I've heard that as well, that they were sort of on the pausing from here statements, which in some ways was a little bit ahead of other central banks like the Federal Reserve, of course, where we've sort of said, well, we're not going to say we're going to pause, whereas the Bank of Canada has sort of made it more apparent. So it'll be interesting to see if that tone, if there's a backpedaling at all in that tone. So
But that's
we
what you have to
talked.
expect.
Yeah. What about the NZD CAD? I know you were watching that one yesterday. Any updates there?
Of course. Yeah, I haven't really got my price yet. So I'm literally just waiting for it to come back higher, but sure it didn't. So right now is a break and retest. If it can just break lower, I'll probably short it tomorrow morning, or tomorrow when it does that. That is the latest update.
Yeah, I'm the same way. Like if I have sometimes people will say, will you still look to short it, even though that would be a worse price than where you initially wanted to short it? Well, the answer is if the conditions are there and the pullback sets up again, I'm still happy to sell it. It's momentum trading 101. Like if something is trading up and you want to be a buyer and it trades up without you, but then it pulls back, momentum says, hey, it should keep going. And if it doesn't, the trade is nullified. It doesn't matter if I get in down here or here. It's, so an interesting perspective.
Yeah, just to show 2 milliseconds how I'm thinking right now, I feel like we are here. So one option is to go back up to previous resistance previously, or a break and then retest short there, and then if it does it again, short again, and then that's kind of how I analyze in the market of where we are. So this has happened before, and it's going to happen again. So yeah.
Yep, makes sense. And what's your take on all this dollar? The dollar was a little bit weird to me this morning. The initial pop off of cooler than expected retail sales numbers. Again, for those of you guys who missed the announcement, we had core retail and retail sales headline coming out at 0.4%. This is under market expectations. Of course, it is still a growth, but it is a slower than expected growth, right? We were, in terms of core retail sales, we were expecting 0.5% month over month. And then retail sales, the headline, 0.8% month over month. So we saw cooler than expected. And regardless, we saw a little bit of a dollar pop, now giving back some of those that gains. What are your takes on that, Ivan?
I'm not going to be flipping the story too much back and forth, but that should be lower interest rate. But what I'm imagining, like, what is the opposite? Then the opposite interpretation is that the retail sales are falling faster than anticipated, and that is one indicator that we might be falling harder than expected into recession. So that's the only reason why dollar would rise. I would even also argue that it should fall. Is this just a pullback to sell again? That's definitely a possible setup that you have to have in mind. So, but also it has backtracked most of the move higher. So yes, it's surprising, but as I say, the news is your friend. So if it goes higher, just look to sell it.
Yeah, no, and I kind of agree with that, but I see what you're saying. You're saying like, well, if there's recession fears surfacing, that could cause a bit of risk-off concern about global markets and perhaps the dollar. Other places will also feel that pain, and perhaps the dollar will be relatively. But in my opinion, and I think we're trying to play. We both agree on this, so we're trying to view it from the other perspective in terms of dollar bearishness. The question, though, is, will something like this and perhaps more economic slowing data, like we got on yesterday's number with the what was the name of it? It's the manufacturing thing. Or the Empire State Manufacturing Index yesterday. Both of this showing some economic slowing could be perhaps a combination of these things. Could be enough to get in front of the Fed and say, hey, you don't want to break the banks. The economy is slowing down, doing some of your work for you. I think that these are potentially dollar bearish contributors. So that's my take on it. I'm continuing. Nothing here sort of challenges, I don't think, where I am at with this, which is staying dollar bearish, looking for pullback sells, buying gold. We'll see. We'll see how it plays out. But also in reference to this number, the S&P 500 took a little bit of a dip here this morning off of these numbers, which somewhat makes sense, right? Retail demand slowing can hurt businesses. So we saw the S&P 500 down here this morning, not by a tremendous amount, just a slight movement. Yeah, I mean, barely anything of note, but regardless, closing out or nullifying yesterday's bit of a rally that we saw during market trading. So,
but that's 100% understandable. The move on S&P is justifiable and understandable. So why are they deviating? Well, it only depends what foreigners will do with information of lower retail sales, and we could talk about it for a long time until we become blue, purple, and pink. But but at least S&P 500 is doing what we're expecting it to do. So, but coming back to what you kind of said, also we still have a trading plan, doesn't change as much. It's one in the pool. So if this continues to happen across the board, then yes, we have to start getting worried. But I was asked to cover gold by Babita forever, and
yeah, please.
What my update on gold are? It's very simple. Have we made a higher high? Can we continue buying? And the answer is, drum roll, I guess, no. We don't have a higher high. We even almost have wicks to the lower side. So for me, it's easy peasy lemon squeezy. There's nothing I can do. Wone says, can you explain the retail sales released? Is it good for dollar or bad? Retail sales is basically, as far as I understand it, is the amount of goods sold, and they measure that, or not amount, but what the value of what's being sold to retail. So it's a way of measuring inflation, because if you buy the same goods, give or take, month over month over month, and then you can track the difference in the value of your receipt, kind of a thing. If that makes sense. So over time, it measures inflation. So it is, in this case, bearish for dollar, because
right.
if retail sales is higher, that will lead higher interest rate and higher dollar.
Right. And the Federal Reserve is paying attention closely to these economic figures, because the Fed is not trying to, they've said that a byproduct of raising rates could be that the economy takes a bit of a hit. They just don't want to destroy the economy. They just want the economy to cool and help them in their mission to cool inflation, right? So today's numbers, I would say, arguably, are in favor of their mandate of trying to see that the economy is slowing a little bit here. Again, retail sales numbers at 0.4%, and core retail sales month over month also 0.4%. So still growing, but at a slowing pace, which is, again, in my take, it is actually somewhat dollar bearish. And again, we're seeing the market not follow through on this gold sell-off that we saw. Sure, we saw in the lower time frames a bit of a spike here to the downside. Gold recovered some of those gains. And again, to Ivan's point, I think that if you're looking at a chart here, we've had a bit of a messy chart. And my idea here, as I've mentioned and explained several times, it's a mix of a couple different things. It's technicals in the sense that I just like this 2000 psychological level. If that breaks, I'm out of the trade. But it's also those fundamental components that we've discussed, such as the debt ceiling concerns, banking situations, perhaps any banking collapses can cause gold to spike, as we saw here in early May. It is something that there's many catalysts that could potentially send gold flying high. So that's where I'm at. And again, as always, that is not financial advice. Ivan and I are not here. We're not your dads. We are, we're doing our own trading and we're sharing our opinion. So please, as always, do your own due diligence. And yes, Ivan, I like that. We're not your dads. That's a that's a good way of saying it, I think.
Daddy. Uh, it had to come. It was silver plate.
It was it was
Um,
set just up for you perfectly.
Yeah, it was there. So what kind of? I'm just looking at chat for a moment, and and when it comes to yen, I don't know if you how much you talked about US yen earlier, but for me, I'm still bearish on yen, fundamentally, and the new governor is even more, I don't know, slow than the previous
Yeah.
one, so even more bearish or even more dovish. So as long as the yen pairs are going higher, it's kind of like buying it, kind of a thing. It's though we had a big fall this morning because of higher unemployment rate in UK than expected. It was 3.9 versus 3.8, slightly the same, but still. And I think this one is going to continue higher, overall at least. So, did you get the entry this morning? Probably not. But I'm just going to update one thing on pound from yesterday. Is that was the level I said, well, we can probably look for a buy there. Did I do it? No. But I just find it funny that I said that price and market came down there. Overall for pound, British pound, Japanese yen just need to have a new higher high, higher low kind of a thing. Kind of like that situation and then continue higher.
Yep. And I think I'm kind of with you on the yen. We've talked about that earlier with the COT data showing institutional interest very much short on the Japanese yen. And you mentioned in terms of central banks, I would say arguably of the majors, the most dovish, right? You've got Canada coming out and saying that they're looking to pause. The Fed is teetering between pause and rate hikes, and the market's expecting pause. And then you have the Bank of Japan, which is just straight up hey, we're not raising rates and we're open to the idea of cutting if need be. So that was an incredibly dovish comment. And you guys are blowing up the comments. So keep it PG out there. Ivan, they're loving your comments here in the chat. That's incredible. So
yeah, I tried to have a comment there, but I couldn't. But but I'm laughing off comments.
No, that's great. Good stuff. Got to have fun with it. We're here every day doing this. Somebody said, Ivan, they commented on one of my videos. They said, Nick, your live streams and videos are just a little bit too repetitive for me. And I was like, you know what? Fair, but trading is incredibly repetitive, right? We're doing the same things day in, day out, and just reacting to what's going on in markets, going through trade setups, managing positions. It is inherently a little bit of a boring job, wouldn't you say so? I mean, sometimes it's incredibly boring.
Is it boring? Well, it can be boring when everything is just automatically, right? But then emotions come in and you had hit some stop loss and all of a sudden you are alive and you feel like crying. But what are we trying to do? We're trying to find repetitive patterns. We're trying to find the same setups. We're trying to find the same market condition. We're trying to evaluate what kind of market condition do we have now? How do we adapt to that? And it's the same process. And unfortunately, in Forex, or in trading in general, repetitive processes is what leads to your success. Mm-hmm. And it's the what is the opposite of repetitive? Like it's the
spontaneous.
Yeah. The random actions are the one that leads to losses because you can't evaluate random, but you can evaluate repetitive, whatever.
Yeah, no, that's exactly right. Because if you're doing something different every single day, how are you supposed to journal and correct and fix what you're doing perhaps not correctly, right? Like you have to have consistency in your approach. Otherwise, there's no, you can't learn a lesson and be like, okay, and next time I'll tweak what I'm doing here. If you're doing it different the next day. So yeah, I agree with you. Speaking of yen pairs, Ivan, the dollar yen, kind of an interesting one. You mentioned pound yen. I'm also looking for setups here, watching for pullbacks. If we get any strength to come in to the pound or, on the yen, if we see any breakouts, this is also interesting to your point. We discussed this earlier. If pullbacks occur, perhaps there's a buying opportunity. But also, I would say that, as you mentioned, if we get a breakout, it also could be of interest. Oops, sorry, my trading view messed up for a second. So if we get something like this, like a big pop above, like a big level, like 170.8, this level of resistance, could become sort of that new floor as we continue to see that divergence in central bank monetary policy, which is something that Ivan and I, we've been doing this together for a while now. It's been an awesome journey. We've been doing lots of commentary. Central banks diverging are an interesting trade play that we've talked about many times on the stream. So give us the rundown, Ivan. Pound, Japanese yen. You've talked about this pair a lot. What's the interest here in terms of the two central banks? What's the divergence there?
Completely opposite, well, now pushed to be opposite. The Bank of England wanted to pause in the previous meeting, though they did raise interest rate, but they probably need to do it again because of the high interest rate, and the next inflation is coming out in around 24th or 26th of May, so you still have some time until that. But generally speaking, they have been forced by inflation to still keep doing it. On the other side of the peninsula is Japan, which is struggling to get inflation at least up to their target until they can stop being so dovish. So in case of like, how do you explain it? The Bank of England, or pound, is so strong, it's so up here, but the yen is so weak because of how their economy is. Like when the UK is really, really hot, really, really strong, but the Japan one is really, really weak in comparison. So they have to have two completely different monetary policies. And until we see a change, I've seen that for a long time, until we see a change in Japan, we have to be yen bearish, and it's almost by law.
Right.
And how do you know that? Because they're doing quantitative easing. They're doing they are trying to make the price of their bonds, their debt, at a specific level, and to be able to do that, you have to use and print money, and it's just going to be more and more and more devaluated.
Yeah, no, that's a great way of explaining it. And that divergence, as Ivan is talking about, is where, when it materializes into a chart, right, the pound is expected to potentially strengthen due to a hawkish Bank of England. Hawkish just meaning they're looking to raise rates and get their inflation under control, and the opposite problem for the Bank of Japan. So this is where, when we compare the two, we talk about being sort of slightly more bullish pound and bearish Japanese yen. So looking for key technical breakouts combines in a way that Ivan and I love technicals and fundamentals. We're looking for a story trade, as Ivan just highlighted for us, and a technical trade, looking for chart price action, breakouts, pullbacks, confluence factors. What we're doing as traders is everything that we can stack in our favor to add probability in your favor. That's ultimately what we are trying to do. And at the end of the day, it's still not guaranteed. We're still risking small, managing positions, trying to let winners run, and trying to stop out of losers as fast as we can. So this is how Ivan and I have been doing it we've been doing this stuff together for a while now, and this is what we do day in and day out. So is it repetitive? Yes, but I would agree. It's not boring. It's actually quite fascinating, especially if you enjoy markets and you enjoy studying what central banks are doing. I also want to say, guys, real quick, just a quick reminder, we are doing a Bitcoin giveaway this month of $500. And if you guys want to join the Bitcoin giveaway, again, it is free to join. If you have not already joined, if you've joined in the past, it won't do any good to join again. It won't add any probabilities to you. But if you want to get the $500 giveaway that we're doing here this month, all you have to do to enter is click the link in the chat. We're going to send a direct message link here, where if you click that link, message us, you'll be automatically entered into the giveaway. Just say hello, just say ask about the giveaway or whatever, and one of our support representatives will get you into the giveaway for free for a chance to win that $500. So yes. Before I step out, Ivan, if you'd like to keep going, you're more than welcome to keep going on with the show and give everybody a chance to hear more from yourself. Before I step out, I do want to say, guys, if you haven't already, make sure to go subscribe to Ivan. He puts on a great show on his own content and also does coaching webinars within our Discord channel. So I want to encourage you to make sure to subscribe to his channel. Go check him out. And as always, Ivan, it's been a pleasure, and have a great stream.
Thank you. Have a great day.
See ya.
See ya. Okay, boys. What I call you sons and daughters. Um, okay, all right, okay. So what I'm gonna do, I am going to go through what I want to go through, and then we're gonna catch it. Because I'm not gonna bore you more than you need to be honest. And where is watermark? Cool. So give your so for the next 5 minutes or whatever it takes for you to type in your currency, your asset you want me to go through. We're going to do that. I'm just going to go through it as I see it from top to bottom, and then we're going to call it a day. So we're going to do New Zealand weakness update. We are going to do some fundamentals. There was a question here that I really want to Nick to answer, but he didn't. But it was Mr. Benjamin says, in the afternoon there will be talks about debt ceiling. They've been talking every day, every moment, every hour of the Senate or whatever it has to be passing. They're talking about it every day, so there's nothing new there. Until the only thing you have to talk about and listen and see is there a deal or no deal? There is no deal every single day. Cool, status quo. Until they get a deal or until it becomes 1st of June. If it's 29th of May or whatever that day is, 30th of May, that, my friend, is a bad day. That's the day we will be like, are they going to pay their bills? Because there has been 1 year they didn't pay their bills, dollar went up. Until they find the deal. But the problem is, if the market believes there might be a deal, the market is going to price in, oh, there is a deal. So there might be a little up and down. Okay. So where's my hands? I can't even do my hands today. Okay. There we go. My hands off. Don't think about it. Don't worry about it. You know, the mafia won't take you. Cool. Great. Gold, oil, CAD yen. So if you're talking now, I don't know, maybe someone tell me that there is someone to talk about, but I will just go up and down a lot. There is already a Telegram group, Cortland. So anyways, so cool. What's your take on Alibaba? After Jack Ma was out, I don't trust it anymore. The risk of hostile takeover by the government is too great. Deterioration by the governance of China is too much of a risk for me. In as much as I would love Alibaba to succeed, I love a good company that makes a lot of profits and doesn't have a lot of debt. But yeah, cool. I will start from the top. But yeah, if I become too aggressive today and be like, hey, you stop doing stupid things, I will tell you, okay? So bring out your stupid things. That also makes great content, but it helps you. Because if you have a question and you ask it and you're like, I haven't had a bad answer, I am sorry. But if you don't ask your question, you are not developing. I don't care if you don't ask the question you were wondering about the whole day and stopped you from trading. You should. I want to help you, so let's start helping. Okay, that's the only way I'm reason. That's the only reason why I'm here. If you don't ask, you don't develop, and if you don't develop, why even here? So I am here on my free time as everybody else. So let's go. Gold. I want this to be bullish. It's not currently bullish. It's currently falling. And if you want to sell it, sure. There was a small little resistance there. That was the resistance from yesterday, which I said I didn't want anyone to sell. If I said up here at 2035 area, that still stands as the level that is the mother load of resistances. And if it does break lower, as Nick earlier previously mentioned, great. Then that is then a sell. But as a buyer, I need it to break higher. And it's currently not breaking higher. There you go. It's currently not higher. So hands up, hands down. U.S. oil. That was actually a very good question, because earlier today we had a stream on my channel around 9 a.m. this morning, and which is how many hours ago? 6 hours ago, 5 to 6 hours ago, and we were up here, and then we fell, and then I said New York is the market that's going to really drag this one out. So we did basically nothing. We are back to break even. We're back to where we started out, and New York hasn't really given us fresh direction by any chance, by any means. But if you're thinking of trading, those are the two prices. Those are the two things that you need to look out for. So that is either a sell there or a buy there. That is now becomes a range, but that's kind of the two things. So if you see a double bottom, you're thinking, is there a pullback here? No, there was never a pullback on that candle. Then we have to do it again here. There is your buy. Congratulations. Now, if you're going to have a buy, you need to have continuation of trend. The other problem is retail sales doesn't make oil go higher. It only makes it go lower. So does that, if you already bought here, which is a pattern you need to understand, and you really need to be like, wow, that works every time. No, it doesn't. But it is powerful when it does. So you need stop losses. The other thing is, this is going to happen again. August. I'm just going to tell you. Learn it. Teach yourself it. If it takes you until August to teach yourself how to do it perfectly, spend the time. Anyhow, oil for me is, where am I fundamentally there? Maybe bearish. Yeah, okay. Let's call it bearish because my brain doesn't work. So then sell 72. That is not trading advice. That is for you to look for a sell at 72. If we break 72 and go to 73, it doesn't bother me an inch. If it does to you, don't trade it. There is nothing to do here. So the current easiest trade to look out for is a sell at 72. No trading advice whatsoever. If you break 74, sure. Then we have then that's a bullish trend. That is then a break of bearish trend. Cool. Good. Doesn't really matter. We are only here to try out our trading ideas. Okay, cool, good. So that is U.S. oil bearishly. CAD, yen, hexa. Whoever who talks about yen pairs, CAD yen is currently going higher. New Zealand CAD is currently going lower. Hallelujah. And the question that you have to ask yourself in this situation: have you ever been in this before? Yes. How do we trade this situation? I am not an expert on this, but I'm going to tell you what I have seen many times before, but I haven't seen it enough times to say to you guys, this is what we do in this situation. When we have a hard fall, a hard rise, and for some reason we come back to this support, it is actually the same thing as my reversal, which we just previously talked about on US oil. But this one in many cases does that. So you need to protect yourself in that situation. Which one is it going to be this time? I don't really know. But what I do know is at that point when we broke that high, we are then bullish. But that is very, 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 very late. It went higher, but I don't have based upon that market, that price action, I don't have a great entry. I'm not going to be like, oh, we missed it, bro. You are such a horrible trader. No. This is very up and down. In those up and down markets, that's where you hit your stop losses. That's where you get out. That's where you're like, but this doesn't work out because this isn't really great market to trade because it isn't smoothly going higher. That's what you're looking for. That's what you want to see. Just smooth. It happens every year. Smooth trends. But if it isn't currently there, should you be buying that? Should you be feeling bad about you trading? What I feel like I'm turning into a New Yorker. Should you feel bad about trading that one? No, really. But if we have a break of 1 at 150, well, let's go to the upside. Let's test and retest, break and retest. Support and resistance, higher high, higher low. Fine. but that's a new higher price. But then at least we have proven, the market has proven to us that we are actually going to go higher. That's all I care about. Does it prove your theory? Yes or no? Yes or no? Easy peasy lemon squeezy. That is a bullish trend line. Euro yen. Do we have a higher high this morning? Do we have a higher this afternoon? The answer is no, we don't have one, so we can't buy it. But we're waiting for bullishness. We're waiting ever since beginning of May when it peaked at 150, 150. And we're like, what if it turns bullish? Okay, we will do so when it does so. Okay, I'm just trying to find. I updated chat. I'm sorry, bros. You guys have been talking. What is it, Curry Wade? Isn't it a good time to go long on British pound, US dollar? CAD yen is selling now. Okay, that is 1,000,000% your trade, bro. Yeah, make sure to subscribe if you want. I am actually going to go live later today. I'm probably going to be a lot of fundamentals since I do technicals now. The break and retest. What is your win rate there? I don't have a specific on that part of my strategy because it's baked into my overall strategy. So my overall strategy has like 30, is it 40% maybe, give or take. But I'm going to give you the math. The math is 3-3-3. 3 stop losses, 3 break evens, and 3 wins. The difference is that the 3 stop losses are 50 pips each, 150 pips generally speaking, on average. Sometimes more, sometimes less. 150 pips in total stop loss on 10 trades. But then I generally do 1,000 pips or more on those other things, on those other trades in combine. So I am profitable over time, just not short term. But when I win, I win big. So that's, it's kind of like, for me, how I explain it, for me, if you're going to take my trading style into consideration, it's delusional. It's not delusional. It takes away from what is actually important. Is it actually important to be profitable over time? Is it actually important to see how many pips you get out of it? Or are you going to calculate your risk reward ratio, which I find to be bogus, and I find win rate to be bogus because it doesn't really matter. Because what I learned when I took signals from someone on the British island, if you want to know the name, I will give it to you. But when I bought trading signals, they had a 100% win rate on Instagram, 100% or 90. But what they did was they had 30 pips pip profit and 70 pips stop loss. And you're wondering about yourself, you lost money. And you're like wondering what is going on. Your win rate was 90%, bro. What's going on? Okay. That's when I learned that. And that is 2016, so probably 15, 17. So that's like, what, 6 years ago? No, can't do math anymore. 7 years ago. That's when I learned that. And that's just my story. And you ask other YouTubers or gurus or whatever you call them out there, they'll probably tell you something different. I'm just going off my own experiences. That's all. What would Daddy Emmanuel, you came in late. Nick is smart. He's here making us busy with a guest for news and fundamentals, and his trading is precious. Okay, should we go trading then? Okay, let's go trading because I did trading this morning. And if you were not there on my channel this morning, that's when I traded. I literally traded. Okay. So if you want to go to literal trading, there is my entry, 74.27. If you want to take it, sure, go ahead. Not trading advice, but I did that. That's what I did. Australian dollar, New Zealand dollar. I have another. No, I didn't buy that one actually. I bought British pound New Zealand at 20018. If you want that entry as well, it should have been there in that session. And if you're here now, you can either take it now or you wait for that price to come back down. But I'm also saying I would also buy it 19500 if it comes back down there. Meaning, if it does that, I will do that too. So don't feel bad. And if it goes higher high, I've also said that if it makes a new higher high, I'll come back to this support and I will just remove it. Okay, so support this one here and this one here. And if we do make a higher high, I will do that. Okay, that's my trading this morning. Thumbs up. New Zealand CAD didn't really get anything, even though I would love to have been at 84.35. It never came there. So sorry, I didn't do it. Hi, Xavier. Euro yen is definitely a buy overall. It says, you tell him. Gear filmmaking, it will come up anytime soon. What's the point of a break and retest such as retail strategy? Trading should not be complicated. Buy wholesale, sell retail, have 1% risk management, make break even ASAP, and protect your capital first. Bailout 88. That depends. You have to really test that out. Please don't just say that blatantly, because I have found out on my long-term trades, I need to have 100 pips stop loss or more, and never put them to break even, and that's how I get most profits. Because if I take them to break even, when price comes back down to the same support twice, I get stopped at a break even, but then price goes on and on and on and on. And I can show you, I can prove it to you if I just go back to like this one here. Let's say I bought, which I did around that area, around 114.90. Let's say I bought it here. A break and retest. Fantastic try to the upside, came back down again, bought it off that support there, resistant turning support, sorry. It comes back down again here, and then I get stopped out. I have found that tends to happen. And if I just continue to have my stop losses on my longer term trades there forever, I will keep that. And then if I lose 100 pips times 8, that's 800 pips down. It doesn't really bother me because you're only 8%. In that time, that same time, I don't have 100% stop losses. I have break evens, I have take profits. So that's what has worked for me in my backtesting. So I don't care what you do, as long as what you have done is proven, tested, objective, realistic, and it is your truth. And if you can prove to me that that is the most profitable way of doing it, do it. I don't care. I just want you to be profitable. Hello, officially. That's all. So, Ivan should be a voiceover actor. Thank you, Daddy. Euro dollar was requested for. Euro yen we did. British pound, Canadian, Euro New Zealand we did. CAD yen we did. Euro CAD we shall do so. So there's a couple of weird ones in here. Euro CAD, I know what to say about that one, but I'm just going to show it to you. Bearish, but not the most fantastic price action I've ever seen in my entire life, but sure do. It is continuing to fall. Okay, that's that. Moving on. What do you do now? Break up, retest, come back up to 146.50. Yeah, sure, or something in that region. Either you use this one has short-term resistance, and this one has a bit longer term. Both can break, so put that stop loss on, because we are quite late in the trend. So this is opportunistic. I'm not saying this is going to continue on forever, but if you just do so, boom, good on you. But be aware, late in the trend, alert. Okay, I gave it to you. British pound, Canadian dollar, same thing, break out of range. I hate that market. Was it Andreas who said it? Andreas, yeah. So what generally tends to happen in this situation is actually that. Plenty of such situations where like retail things, this is gonna get lower. But in real life, in my experience, that is the end of the trend. That is starting the bullish trend. And if it does go lower, don't feel bad about it. So in this case, I would actually make you look for bullishness. So yeah, that is all. US 30. Yeah, I'm not bullish. Whatever. Pound, dollar. Somebody asked if you can buy it earlier. That was the price 24.64, which I mentioned yesterday. Today, I don't like it at all. I don't like this at all. What is your thoughts on gold? I want to be bullish, but it's bearish, so I can't. Euro pound, not really anything interesting there. Mostly a range, often. I was right again. It is mostly a range. So, no. Either break of 87 or 30 or 86.60. Jetan Picky, what do you mean by are you kidding? 13 pips stop loss, 13 pips take profit, 70 pips stop loss, 70% win rate. That sounds profitable, but it actually is horrible. It is not at all. I said 30. 30 TP and 70 SL sounds it, but it's not. It is I never made profit on it. So that's my proof. I didn't make money on it. Where do you learn to trade or from your mistakes? What time did you stream EST? Probably 2 a.m. or something like that. Could you elaborate on more on British pound, yen, and USD yen? Your dollar seems all over the place at the moment in terms of sentiment all around. The debt ceiling and position bullish. I got in the dips earlier in the day. I would not be bullish on dollar at the moment because there is bearishness coming when the debt ceiling agreement is being done. There might be short-term volatility that will make you go into profit on dollar, but I'll bet you $10 is gonna come back down and even further than the bullishness ever made. Yeah. So to me, that is like, so when you learn to trade, you can look at the free resources on my channel, on this channel, on A1 Trading channel. Support and resistance, trend trading, trend following, trend reversals are the most important things. Key important. You need to be very good at an expert level at technically, and then you need to start looking for trend, where the trend is going to be before it even starts. You can use seasonality, you can use fundamentals, you can use sentiment, you can use sentiment, seasonality, or fundamentals to guide you into forward guiding indicators or indications. It's probably the word. Yeah, obviously you do so, but in my experience on my longer term trade halo, I don't bailout. But yeah, that is that. Good morning. Hi, DS. So, would you short USD yen at this point? And my very simple answer is no, I wouldn't. It's a new higher high, trying to make a new higher high. The only reasonable thing in this kind of market is bullish. So, if you are bearish, you leave it alone. If you have a sell here, wait for it. Stefano sent me a message. Okay, cool. Use the cat. Last one. Okay. What do we learn in this situation? I said short 135.80 or leave it alone. Market fell anyways. Does it matter to you? You bought 134 or buy 134. Yes. That is a viable trading plan to buy 134. 1.34. Would I? No, I wouldn't, because it hits master plus if I do it. It's like some kind of global Illuminati thing that happens. I wouldn't, but you can look for a reversal there or whatever your trade entries are. But this one's currently falling pretty hard. But I'm not going to say anything about it. I will applaud you if you do follow your rules. If you take the trade and you make money out of it, and you follow your trades and your rules, fine, good. That's all. That's all. I love it. Ross, no, not yet. Cat Paris was strong, potentially not so strong anymore. Has to make lower lows, which he did on USD Cat. Cat Yen tried to make a higher high, which he currently is doing. New Zealand Cat tried to make a lower low, kinda. So yeah, Cat is strong, but don't let it fool you. It can do 100% reversal. We said on many times before. Euro dollar is respecting a bullish channel. Sure do. I don't know if I see it though, but maybe I'm blind. But okay. So what I'm saying to you, Euro currently isn't bullish for 4 hours. It will be. I don't know if it's tomorrow or if it's 28th of May or beginning of June, but somewhere in the end of May, June. So we are now mid-June. So we have 1 week or 2 weeks until that happens. Euro dollar can go down to 108, 107, 106, for that matter. In the meantime, only giving us better prices. Okay. So right now, don't do anything. I'll be live later on my channel, EvanFX. Maybe half an hour. I'll try to gather all the information first before I go live. It will be fun. It would be only about fundamentals mostly. Give you guys an update. That is kind of what I'm going to do. Okay, cool, good. Boom. See ya.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, you can improve your trading performance 30 times faster with Forex Tester 5. Backtest your strategies using real historical data. From all of us at A1 Trading, have a great day, and we'll see you next time.